Sanctions. When the US State Department designated 20 individuals and one company, it put the markets on notice that changes might be coming. This had the consequence of meaning that stainless steel mills, for example, in the States, are wondering how they'll obtain material if it's harder to obtain Russian nickel. They haven't started buying spots, but if they do, it could have an effect on their premiums and prices.
Okay, if I had to pick one of the most significant news stories for the market this week, it would have to be the speech made by China's Premier Li Keqiang on Wednesday, when he sought to reassure jittery global investors that Beijing would take all the necessary steps to support the cooling economy. I suppose these comments would hold out hope for a new mini-stimulus plan to shore up growth, and among the specific measures that would be taken are bringing forward construction of basic infrastructure, including railways, highways and water conservation projects, all of which would of course be very positive and welcome news for the steel and metal markets.
Aluminium premiums have been uncharacteristically flat for a couple of months and shooting up in January. And the big news this week is the UK High Court ruling in favour of United Co. Rusal against the London Metal Exchange, the result of which is that the London Metal Exchange is delaying the implementation of its new warehouse rules. This is going to have big implications for aluminium premiums, with much of the market thinking that they inevitably will rise in the next coming weeks.
Once we picked our jaws up off the floor and started looking into the detail of the judgment, it became clear that for warehouses there's unlikely to be a big significant change in behaviour. They'll continue to load out material and try to get themselves on the right side of this 50-day threshold at which the linked load-in, load-out rates kick in. After the ruling, they'll have a bit more time to do so, but they're still betting that the rules will eventually come into effect.
I've been at our second international nickel conference in Seville this week. Nickel prices certainly seem to be rising, apart from the fact that the market's still in a massive surplus. Predictions of $20,000 nickel were looking optimistic a few weeks ago, but those kind of predictions are now looking fairly standard. Some people are also suggesting $35,000 nickel in the next 2 years could also be a possibility. Stainless steel mills are also reportedly building buffer stocks now in order to avoid any potential supply interruptions because of the Indonesian ore ban.
So it's been an interesting couple of days for Rusal, the largest aluminium company in the world. They've had the outcome of their court case with the LME yesterday, and then today Rusal has had its 2013 results released, which show a $3.2 billion loss on their restructuring and one-off impairments of $2 billion.
At the same time the nickel conference was starting in Seville, the lead market gathered in Sofia to talk about the latest developments. One of the main talking points was that the high silver lead concentrate market is continuing to tighten as smelters increase their ability to process byproducts. This has driven treatment charges down, while refining charges have kept stable, and interestingly it has also driven prospecting in the area towards high silver sites.
The news stories that caught my eye in Metal Bulletin this week have been about the Fania exchange. 5N Plus has just been authorised to deliver its bismuth. Bismuth delivered to Fania has actually underpinned the market over recent months. MB, of course, will be keeping a close eye on these, and we look forward to seeing the management of the Fania exchange when they visit us in our London offices next month.